Most people never see the machinery that keeps global financial markets running. My guest today, Chris Watts, has spent nearly 2 decades inside it. From collateral management and post-trade infrastructure to large-scale transformation programs at some of the world's biggest financial institutions, Chris has built a career solving problems most market participants don't even realize exist. After years working across institutions including JP Morgan, Credit Suisse, and Deutsche Bank, he co-founded Tonic, an expertise-led firm that protects and accelerates the goals that actually matter to clients. Because in a world overflowing with opinions, genuine expertise is not that common. He's also one of the sharpest voices on where this industry is heading next. Tokenized securities, digital assets, 24/7 derivatives trading, real-time settlement, and the genuine role of AI in capital markets. If you want to understand how the pipes of finance are quietly being relayed, this is the conversation. We also explored the grit behind the glamour, disruption with substance, and what it really takes to rewire the traditional plumbing of banking and finance. Lovely to see you, Chris. Welcome to the Escalation Podcast.
Thank you so much, editor. Awesome to see you. Awesome to be here. Looking forward to the chat.
Yeah, I'm glad that you like the studio as well. And it's been a long time. We haven't seen each other for 6 years?
It's a bit embarrassing, isn't it? It's been an incredibly long time and awesome. I know we were having a chat before we started just around your journey and being a mum and now having a couple of kids and running a business. And I feel like we need to reverse this at some point.
We do. We need to grab coffee or lunch for sure, just to talk about what's been happening over the last years. But what I love about your story and why I really wanted to invite you to sit down with me and have the conversation is how you've spent, 2 decades in the industry now? Probably about 20 years. Yeah. And not only you're inside the machinery that kind of people only see when it breaks, the post-trade collateral calls, all of that. But then you left to create a company that makes it better, that creates improvements, that tries to take the traditional model and do something more exciting and novel about it. So I wanted to start there and ask you, what have you noticed during your time at whichever bank you were then, at the time where this thought came to you, this can be done better? There is something that the traditional industry model is not quite, doing for us at the moment. So tell me about that. That moment when you realized.
The sort of the genesis, I guess, of Tonic.
Absolutely.
And our model. I've been quite blessed to have I've got quite a mixed set of experiences across the industry. So I've worked on the dealer bank side for multiple. I grew up at JP Morgan, which was awesome grounding for me.
I love that. Grew up at JP Morgan.
No, it was honestly, and you don't always appreciate it as much as you should at the time. Right? But just being at one of those major institutions that's so well organized and so well structured. Has a really intensive sort of training, personal development program is always huge for me. So it's a soft spot still for JP Morgan. But then I've spent lots of times at great other dealer banks, at Deutsche Bank, at Credit Suisse, and then importantly had a big spell at another consultancy. So interestingly, this consultancy called Rule Financial and eventually got acquired by a bigger German outfit called GFT. Rule Financial had a very specialist business consultancy arm that leveraged practitioners. So practitioners that had worked intensely in a respective set of domains, and I was one of those practitioners that was brought in actually by Rule. So I guess I could see the value that model provided compared to the more traditional consulting models that I received when I was on the dealer bank side. So look, not here to diminish the legacy consulting models, and there is absolutely a home and scenarios where that consulting model comes into its own. I guess what I noticed is I've spent almost all of my career in collateral, post-trade, financing, quite niche domains in the grand scheme of things.
Exactly.
Quite, with a lot of nuance and a lot of complexity.
Yes.
And I guess as a receiver of that historical model, I just felt that there was low value coming back to us. The consultancy was a bit more generic. We would, as the SMEs internally, feed our insights and our concepts for strategy and direction. I felt there was a lot more that the industry could do actually in terms of a model that would provide high value for clients. So hence the seeding of Tonic.
Yes.
And this was when I was at one of those banks in particular, when we sort of had a parade of the big four coming in.
Yeah.
And I could see the opportunity to offer real expertise-led, practitioner-led consultancy that frankly accelerated critical business outcomes for our clients. So, and those outcomes would be commercial growth, those outcomes would be scalability, resilience, regulatory compliance. And you can only really achieve those goals if you leverage folk who've been there and done that before or done something similar before and can apply those lessons learned to different scenarios and partner with clients in a very client-centric model. And that, I guess, is the frame of what Tonic became 8 years ago. And the really the frame and the set of principles that we base ourselves on today. You know, well, our principles are expertise-led, it's client centricity, it's continual improvement, it's trust. And fundamentally, we've stayed very true to those principles and they've guided our direction over the past 8 years.
I love that. It really rings true to me because we both founders, we've got businesses that were created, foundation of which was our experience on the buy side or the sell side. But what I want to talk to you about is that early stage of building the business as a CEO, as someone who's just left a big industry, which gives you everything really that you need. You know, you don't have to worry about the printer, you don't have to worry about HR, you don't have to worry about employment issues. Then all of a sudden you become your own boss, which so many people these days get excited about, right? Entrepreneurship. That is the trend of the decade, probably. But there is a realistic side of it where kind of it hits you that you need to be your own salesperson, marketing person, HR person, you do everything. Obviously, unless you're blessed with a huge investment at the outset, but still, you are the brand and everything. Everything follows from the founder's mindset, from the founder's approach to the business. So I wanted to ask you about those first few years. It was just you and Craig. And how was that for you in terms of, like, I talk about entrepreneurship as a true path to self-mastery. Like, to me, that was like someone putting up a big mirror thinking, oh God, okay, here we go. How was it for you? What was the experience like?
Yeah. So I think you know what it's like. You go through so many phases when you become an entrepreneur and you set up your own business that it was such a different world to what we look like today. So thankfully, I wear nowhere near those number of hats today, right? And we've got an awesome team around me and around us that gives the ability, frankly, for the company to scale. Exactly. But also it's just a far nicer journey when you've got a big group of folk all fighting in the same direction. But looking back 8 years, I think if I share sort of early emotions that come back when we talk about it, I guess excitement initially, right? Yeah. I was ready to step out of the more corporate world. I felt a little bit more constrained in terms of personal growth and career growth. And I was excited about the opportunity to make calls myself and make big decisions myself and not necessarily have to go through layers and layers of approvals before we got there. I felt ready, actually, at the time. I felt there was a sort of, don't get me wrong, lots of nervousness, lots of anxiety, but a sort of an inner quiet confidence that
I've got this.
Me and Craig, because two co-founders of the company, for those that don't know, could do this together. And we could see a gap in the market. We see a genuine opportunity. And then it was on us to deliver to the levels that we expected of ourselves to grow the business on an ongoing basis. I guess there's an interesting anecdote just in that first year where we stepped into the first client. We had a 6-month engagement. super excited about this first gig. Worked with a bank on UMR. I know you were heavily involved in UMR back in the day, so we were doing the whole shebang. So we were delivering on the ground. We were doing the analysis. We were doing the business requirements, the target operating models, the vendor selection. On the side of the desk, we were desperately trying to build a pipeline and build stronger relationships with the industry. 6 months later, the powers that be, the regulators decided that the industry wasn't going to be ready as a whole for, I think, what was then phase 4. We're going to delay that phase by a whole year.
Oh, God.
Maybe it was phase 5. Maybe it was phase 5.
I think it was 5.
Was it 5 that went back by a year? So 5 went back by a whole year. And our client said, chaps, you've done an awesome job, but see you later, because we can't afford to keep you on for a whole year. So we're going to park this for now. You've given us an awesome head start. Let's keep in touch. So hence blind panic.
Yeah, of course.
Blind panic. No, in reality, no pipeline. Nothing next. Some conversation, some warm conversation. But it was so engrossed in a great job for that first job and getting a really strong reference that we could then use across the street to improve our credibility. And then get back to your original question. Yeah, it was 6 months of literally nothing coming in whatsoever, but barely a penny coming in. And that brings a whole world of stress and anxiety and self-questioning and self-doubt. But I think that's also where the human side kicks in. You tell yourself, no, look, we've got a great product here. This is addressing a genuine gap in the market. We can improve the industry via our services and our level of expertise. And then eventually it came. Like Craig and myself had edgy moments for sure.
Of course.
But we sort of parked the self-doubt up. We kept going. We kept our heads down. We kept improving. Continual improvement's a big theme to anyone setting up their own business, as you know, right? You can't stay still. You've got to add new strings to your bow continually, evolve continually. And then the big logos came in about 6 months later. We got a couple of big logos, BNY being one of our very first. A big Japanese bank as well come in. And then certainly not the rest is history, because there's been a huge amount of hard work since then. But we'd laid the foundations for a successful business model that we could incrementally grow year by year. And that's been the case since.
But it's lovely to see, the vision, where you came from. And now, are there any beliefs that you held around the business and how it works and collateral and things? Obviously, our industry is changing massively, and we're going to talk about it in a minute. But are there any beliefs that you had to let go of immediately now that you think about them, think, oh my God, how could I believe that was the case? Anything that stands out as like almost laughable that now it was totally not true, but then was driving some of your decisions as a founder?
It's, from working in big corporate environments, there are some lines around the scope of your role.
Yeah, absolutely.
And I think there's huge pros of working for big corporates, but it's, as soon as you step out of that, you sort of know that you need to become more versatile and more flexible and add new skills and capabilities. But I think what you probably don't appreciate is the speed at which you need to do all of those things. And when you run a consultancy, it starts with sales and relationship management, right? We're still in a very trust-based business. And when we stepped into Tonic, I had, I would say, almost zero market profile. So almost nothing. So I'd sat on industry groups within the industry to push forward key agenda items and the like, but nothing publicly. I was always in the background of these big corporations. And for that reason, me and Craig, in hindsight, I think what was crazy is for us to think that we could set up a business that would be successful with almost no network and no profile, and just expect success to come was a huge gap in our expectations versus reality. And we spent, honestly, I would say the majority of those first couple of years just building that profile, just creating content, speaking at webinars, events, really getting the brand out there with a lot of thought leadership as well. UMR was particularly big then, as we've mentioned. We used that as a foundation to grow the business.
I want to talk to you a little bit about the grind, and the hustle. And our industry in particular has a rep for it. Let's put it that way. Is it different when you run your own business versus what you experience on the sell side?
Yeah, hugely.
Okay.
Yeah, night and day.
Because I think people have this delusional vision of, I'm just going to sit at my computer, in Bahamas and do the business from remotely, which is great for those who do. But I think in our industry in particular, you mentioned something that is pivotal to our business as well. Everything is relationship-based.
Yes.
It is people coming to you through word of mouth, which is the best type of marketing that you can get. But you need to get out there for people to come. You may have the best product in the world, but if nobody knows about it,
I hear you.
It doesn't work like that in today's world. So how do you combine this, visibility, grind, hustle? How do you find the balance around it? What's the secret formula?
Question. Yeah. So, and honestly, I don't have the secret formula. I wish I did.
Yeah.
I've learned a lot, that's for sure. But honestly, people sometimes ask, most important characteristic or trait for a successful entrepreneur. For me, it's grit. It's
grit. I love that.
It's grit. It's resilience. It's fight. You will lose a lot. You will lose continually as a small business. I was lucky enough to have a background that made me a bit more comfortable with failing, actually. So I, as a kid and up to adult years, played a huge amount of tennis.
Oh,
so I played
great.
tennis super seriously and competitively, and toured, and ultimately wasn't good enough, which is why we're here today, because I needed a second career.
Thankfully, yeah, there we go. I was a piano player, so there we go.
Oh, very good. But I think it's a sport like tennis is brutal. You lose so much. You lose points continue. I don't know whether you saw there was a Roger Federer speech recently, and he said basically very humbly, yes, you guys might think I'm one of the best players ever.
Yeah.
Did you know
how many times
I've only ever won 54% of my points ever?
Wow.
50, and the other big names that you're aware of, the Nadals, the Djokovic's, they're all a similar stat. So it was good grounding for me to just continue, and it built up a level of resilience that converts quite nicely to business. And I think if you've just got to be very, very comfortable with the fact that it's not going to go your way a lot of the time. And part of the strength in growing that business is being able to reset, learn from mistakes or things that you could have done better, improve, go again, get a little bit better, and then a little bit better, and a little bit better, and gradually all those incremental improvements, especially when you're part of a team, if you're all improving at the same rate, lead to seismic sort of changes in the business and ultimately your success.
The grit is so important. And I read somewhere, I don't remember now where, but a lot of people connect big success, especially also in our industry, with that level of grind that you just have to put in the work, 20-hour days, etc. And some of it is partially true, I would say, but also a lot of it comes from continuous effort and resilience, because it's not that, we're smarter than, at least that's how I think about myself, starting the consultancy. It's not that I'm
definitely not. That's for sure. Yeah.
But I'm just consistent.
I think consistency is a great word, because it's, again, the ability to be present each and every day and to be in fifth or sixth gear and really pushing for improvements within yourself and within the company and taking the company to the next level. You could, as a leader of any business, you can't be inconsistent. You can't be present some days and not others days. You've got to be on it constantly. So I guess what I'm not answering is how to achieve the work-life balance.
Well, I don't think it exists, to be honest. But and let's talk about that briefly before we dive into your expertise. But you've got your own family, you've got your kids, you've got your life outside of work. And it's different than being on the sell side, going through a corporate environment. It's your turf, it's your company. There's people who rely on you to deliver so that they can pay their mortgages and support their kids and family. It's a huge responsibility.
Yes.
At least that's how I see my own business as well. Once the business grows and you've got all these other people who are bringing their talents for for you to use, it's a different level of, I don't want to call it stress, but responsibility.
Yes.
So how do you manage that sixth gear kind of level of presence versus the family life? Chris, that's at home, that kids have some demands as well. Quite rightly so. How does that work?
So I think it probably works a bit differently, I guess, for everyone. For me, I think it's really important to segment your life into chunks if you can. So I am dad every morning.
Love it.
Without fail. First thing in the morning, whether it's readying kids or taking the youngest to the nursery. That's part of my day that I love.
I love that,
And it's incredibly important for me, conscious that, hours are long. But I couldn't lose that connection with my kids. That would destroy me. And then I get home later than I'd like sometimes, and I become dad again for another couple of hours. And it's awesome at the moment because the sun's out, so we're all playing in the garden and messing around and doing whatever sport. And those are, really, really precious parts of the day. I'm definitely guilty, post-kids going to bed, of opening up the laptop.
No.
Goodness. I know. And
know.
And don't get me wrong, it's so much easier now. So my personal burden is a lot less than we talked about 8 years ago. What did it look like? It was, honestly, looking back, it was crazy. It's absolutely crazy. I think where it gets messy, and I've definitely been guilty of this previously, is if work and family life sort of get blurred and you can't draw any lines at all between the two, then things go south quickly. Different ways of achieving that, right? A lot of it's a lot of discipline, frankly, because you sometimes you work so hard and you think, this is great. I'm being really disciplined with my work. Really being arguably not very disciplined with the most important things in life: your family, your friends, your kids.
How do you unplug? Do you have time where it's like no phone, no kids, no, like just Chris? I don't know. What's your space?
There is it's a great question. I was having this chat with my wife recently, actually. So I have almost no time, just Chris.
That's not good. Yes. Chris, we got to fix this.
I have almost no time, just Chris. My release is sport. I'll do my sport 3 times a week, right? Whether it's weights or running. Running, I think, is a huge head cleanser.
I love it.
Right?
Yeah.
I can go into a run with 3 problems in my head. More often than not, I'll come back and
with 7.
I would have moved. I hope not. Not normally.
All the solutions.
I would have not necessarily solutions, but I would have moved forwards.
Yeah, I agree.
I would have moved forwards 2 of them, say, and then I feel far better and reassured about the day ahead. I normally run in the mornings. But it's like I said, I'm definitely not claiming to have cracked the code entirely. Yeah. I'm still a work in progress.
Sure.
Time with Mrs. Watts is important, I would say, as well. Yeah. So I do, although I'm not by myself, it's, we find time to have meals together, to go out, and that's a complete release from all things work.
Tell me more about Tonic now. I read a few of your articles or interviews before when preparing for this interview. And often we see when you step into a big organizations like a bank, everything is siloed. So I want to talk about this solution that you bring to an organization that has been around for donkey's years. It's very traditionally wired. There is a way that things are being done, and it's not easy to change certain ways, or it requires approvals from 150 people across 7 different continents of the world, and it's not a quick fix, if you know what I mean. So, we've got our derivatives and repos, and everything is siloed, and you bring a solution that kind of brings it all together. It may raise some eyebrows and ask questions like how we're going to do that. How do you guys approach the traditional banking system when you bring in a more, I would say, modern solution to something that's been working well
Yeah.
for a number of years?
Yeah, it's a tough question, isn't it? Because none of us are going to ever entirely remove these silos. Just
Right.
the way that these organizations are set up. And look, it's probably worth saying that silos will continue just because, folk are compensated typically at these banks at divisional level, right?
Yeah, of course.
It's less clear cut to include objectives and KPIs cross-divisionally that drive bonuses and the way that people behave.
Of course.
And also, let's be honest, it's bloody difficult.
Yeah,
it's really
right.
difficult, right? If you want to actually consolidate technology, architecture, and people operating models across different is a big lift. And for that, you need commitment, long-term commitment from a set of leaders within one of those banks to make it happen. Like often these are 3-5 year
projects,
projects. And it is rare to get a consistent cohort of leaders that are going to drive that same journey together, right? Because of the way that they're individually rewarded and focused. For us, I guess, there's different models at Tonic. So we break Tonic into domains. Yeah. So Margin Tonic, our previous company name, is now a domain and sits alongside Clearing Tonic and Financing Tonic and Full Financing, Repo, Seclem, Prime, Full Post Trade. We work that today in Treasury and Risk and in Front Office. So we've tried to, I guess, mirror the way that we're set up versus our clients.
Amazing.
So it's easy to engage us at divisional level if there's a divisional challenge to be solved for. But importantly, in the last couple of years, we've introduced key horizontals. So at the moment, digital assets.
Yeah, let's talk about those in a minute. Yeah,
there's a bit to talk about there, isn't there? There's a bit to talk about there. But digital assets is a horizontal that sits across all of those domains, whether it's tokenized assets, stablecoin, pure crypto. And I guess what's interesting now is organizations are collaborating more internally to execute some of their solutions for digital assets and make sure that they maximize their benefits. So just a real life example, we're engaging multiple teams within the same engagement. So there'll be a central digital assets group. There will be business teams that are receivers of the benefit of those digital asset use cases. So the collateral team might be one of them. There's often funding and optimization teams that actually make those collateral allocation, liquidity decisions. There might be a clearing division. There might be a separate financing divisions, repo, Seclem, and they're all part of this game now. So I think we are taking steps forwards in terms of taking down some of those barriers based on where the industry heading. AI as well.
Yeah, huge.
We're working on a divisional basis, I would say, predominantly for early use cases and reaping benefits. But increasingly, we're seeing across the market, again, there's centralized AI teams that are trying to ensure standardization and structure and collaboration between different divisions. So yeah, positive spin on things, but we are seeing increased cross-divisional collaboration driven by some of those key initiatives.
Love that. Where is the highest demand at the moment across, if you look at your divisions? Are you seeing one of them standing out in particular? Is it AI-driven or technology? Is there more demand than what you would see like last year even? Or?
Yeah, I mean, digital assets and AI are the two super high-growth domains for us. Just based on the fact that we all know that is not just the future; it's the present, albeit the present on a smaller scale, and this is going to become everything
the future
over the next couple of years. So
that's interesting because I feel like a lot of people don't really realize how advanced we are in that space and how quickly we're progressing in this area. And I just wanted to ask you whether the traditional banking system, because we were talking about like 24/7, follow the sun kind of approach to trading, which is all great. You can have a collateral call on Sunday, 3 a.m. and the supporting pipe around it is still driven by these traditional plumbing that we've put in place historically ages ago. So to me, there seems to be a gap. So technology is creating solutions that the infrastructure may not be able to sustain. Do you agree with that? Is that what you're saying as well?
Yes. Yes and no, probably, because the observation is absolutely right. We can't benefit from a digital asset ecosystem until we get the foundations right. I
Absolutely.
guess what you're seeing across the market at the moment is folk are rallying around, I guess, some of those foundational layers that we need to execute to benefit from broader digital asset benefits. So the key use cases out there include collateral at the moment for digital assets. And we talk about collateral, but it's really the life cycle from margin call agreement all the way through to settlement. So it steps into post-trade as well. And for us to, I think, as an industry, really move at scale in terms of front office use cases. So trade execution, digital native, combined with algo trading, blah, blah. We need those foundational back office capabilities to be strong. So it's what we're seeing is a lot of focus to get the foundations right. So there's a lot of movement this year on productionization of key platforms. So I don't think 2026 is the year that we're going to see critical mass. I think that's well known. And there's a spectrum, as with any industry change, of, say, believers in digital assets. So you've got some real skeptics on one end. This is never going to happen. This is all a fad. It's going to go away in the next 6 months. We're spending too much money on this. And you've got the evangelists right at the front of the peloton, right, pulling us all with them, saying, this is it, we're doing, and there's the I guess the practical folk in the middle, and I think we're broadly in the middle. We know we can see the benefits that it's bringing for our clients, especially, but conscious that it's important we all, as you're doing with your question, just apply a practical lens to all things digital assets and AI, and ensure that we've got a structured roadmap to allow us to all build up the scale that we want in the non-too distant future. If we move too fast and we don't think so strategically, the chances are the benefits will be lower. People lose trust, and then it takes time to build the machine again. So it's really important that we all get some quick early wins, I would say.
Oh, absolutely. And that's proof of concept as well. So for what you've been seeing in the industry when it comes to AI aspect and capital markets, I guess what I'm trying to establish is how much of it is genuine adding value, whether it's using software systems, to help people get there faster, essentially, and how much of it is an expensive add-on to something that, we don't really need at this stage. And also, have you observed a shift of humans being replaced, as they say, by technology? As I'm sure everyone heard, CEO of Anthropic has predicted that by 2028, is it, or 2029, 50% of white-collar entry-level jobs, especially in consulting, banking, finance, will essentially be wiped out. I think a lot of it is happening already, but going back to the core of the question, AI, expensive, not needed in some certain levels of what you're implementing, or necessary to add value. And are you seeing people being pushed away to let the machines do certain things around collateral digitalization that even 2 or 3 years ago it would take months to complete, right? That's it. The change is huge.
I guess why, probably worth us taking a mini step back. Why are our clients so focused on AI? Profit growth, so cost reduction, profit growth, but I think also scalability. So the ability to do more, trade more, have more volume coming through them via often their clients. We have a lot of service provider, infrastructure provider clients, and I felt like 2025 was a year of investment in AI, and I don't feel like as an industry we got particularly far because it felt quite bifurcated.
I mean, we've got clients who really do not want us to use technology, to a certain level around their documents. They really like the human touch.
I hear you.
The AI cannot sit in a room and have a conversation and do a lot of things that our clients still want us to do. So I don't think that bit's going to disappear. Sorry, I kind of interjected there, but there is still a lot of hesitation outside our industry. So I totally agree that there was this investment, and
fair.
now,
I think that's fair, and I think it's like anything. I think we've almost got to break the problem statement down into chunks, and within the legal space, especially where you're working, I completely get it. There's, it's a human-driven operating model.
Yeah.
No doubt there's going to be components that are digitized over time. But I think early use cases that we're seeing are the likes of, this is a heavy sort of post-trade focus, but reconciliations, automated reconciliations, right?
Yeah.
Using AI technology and the ability to continually evolve based on new data points being fed in, new data categories being fed in. Price validation is a key one that's coming through. We've been working with a key client recently on, dare I say it, faxes and email payment instructions still being received into a service provider with huge offshore presence used at the moment to process those instructions.
Wow.
Obvious opportunity to use
absolutely
Gen AI
technology,
actually consume those instructions, turn them into data, and then feed them on to relevant downstream platforms.
It's incredible that some of them still rely on.
So I think that's what we forget sometimes. It's really difficult, I think, for any of us to talk about something like AI holistically.
Right.
Because I just think the problem statement's so different per domain, and there's genuine value add for AI within a lot of the domains that we work in. Well, that's using the same phrase continually, but it's not a one size fits all. There'll be other part of the bank that are less ripe and maybe come in further down the line.
And you at Tonic, do you guys utilize technology, AI?
Yeah, we have AI partners. So we have
great.
AI partners. But we are also cognizant that we're often working with clients who have their own partners.
Of course.
We're agnostic effectively to the solutions that are used. We're being used at the moment as the bridge between the business, problem statements and use cases into whatever AI platform or platforms are being used on client side to ensure that they've got clear roadmaps, strategy, execution plans to incrementally over time automate as much of their worlds as they can, and therefore become more scalable and reduce their cost base.
What's the future of collateral?
Yeah, been asking that for 20 years.
Yeah, I know, right?
Yeah, it's. I think collateral. Look, stepping back 20 years, collateral was a really unsexy domain, right? And I'm not saying it's the most
courtesy of Lehman Brothers, right?
Well, that
clearing.
Didn't help. Well, so in some ways, it's helped a lot where we've come to today. But pre-Lehman's, I was at JP Morgan as a graduate working on the derivatives collateral team.
Wow.
And it was...
what a gig at the time. Amazing.
It was, you know what, it actually felt quite exciting.
I was very excited then,
And we were seen as the, how do I say this in polite terms? The... is the arse end of the organisation, right?
Right.
It was very much just an insurance product.
Right.
Take up on the buy side. Pre-Lehman's was relatively limited, and it was horribly manual.
Of course,
even at JP Morgan at the time, right? So this is, and they were leaders in this domain. So. Yeah, if you think about the evolution that we've gone through since, right? The technology, and it was big tech back then, big platforms that could actually automate a lot of your workflow. The lot of offshoring, nearshoring as well, and then the whole regulatory overlay that's played out over the last 10 years, 20 years, right?
Huge.
From Dodd-Frank to UMR and the clearing regulations, and then, impacts from CSDR and T+1 now into Treasury clearing. And now we've got this whole new world of digital assets and AI in front of us.
Absolutely.
So I think whatever that new world looks like is going to look night and day compared to where we've come from, and is going to be underpinned by new tech, far less people.
Yes.
To be honest, from an operational perspective, at least, I think that's what we've all got to get comfortable with. Is we need to see these new technologies as as facilitators for us to all take on higher value tasks, decisions, judgment calls. But I think you're going to see a process cross-product that is managed by exception, rather than some of the more manual streams that exist today.
What strikes me is what you mentioned just now: less people. Right, in your world, collateral ops, post-trade, clearing, etc. For someone who is just starting in the industry or is kind of already there thinking about building a career in this field, what are the skills that you would say you have got to think and focus on those so that you position yourself to build a successful career in banking and finance in this area? Because, it's not about AI taking your job or taking over. It's your colleagues who know how to use it and how to position themselves while using AI to be the asset to the company. So what are the skills, and how would you, what would be the best advice to give to young people who are trying to build a career in this industry?
I hear you. It's a really important question, firstly. And look, we got 3 kids, so we're asking ourselves, right? Very similar questions. The path is not as clear cut as it would have been when we were at a similar age. I think what's undeniable is you've got to be really comfortable. I think in both the business side of things and the technology side of things. I think it's incredibly important that we're all technology literate. Historically, there's been big lines in organizations between business and tech. Those lines are sort of blurring now as digital asset solutions come in, as AI comes in. Those solutions are coming very much into the business and fundamentally changing the way that we're set up. So, I think all youngsters would be well-versed to pick areas of the business that interest them and get as deep as they can, frankly, into those products, those domains, those regulations, those key vendors that are out there. But we've got to wear this tech lens at the same time. And even if it's uncomfortable for folk that have been less tech literate over time, and I think the current generation are probably in a different place to where you and I were at, right?
Absolutely.
That was there wasn't such a need back then to be so tech savvy. But no, definitely that combination. The only other thing I'd add is the softer side, actually. I think sometimes we get consumed with the amount of technology change that's going on. We're all glued to our mobile phones.
I know, right?
Surely people skills and communication skills and the ability to convey a message and converse with someone to reach a solution are just as important as ever. So I think that's something really important for the youngsters not to lose sight of is as tech takes over incrementally, it's on us as the humans to increasingly make higher value judgment calls. And to do that, you need to be able to communicate really well with other people.
I think communication skills are critical, and you see that being in increased demand. And so are actually sales skills. If you can sell, you go into pitch meetings probably quite frequently. You speak to your potential clients, even existing clients. I think it's incredibly important to be able, with confidence, to sell what you do best. So it's exciting times, but I think it's very difficult for young people who are now positioning themselves, especially for our industry. It's not easy to make the right decision, not only about, which division to go to. From your experience, where do you feel the biggest growth is going to be, the most exciting? Obviously, that's very subjective, but where do you feel, young people should be looking at? Is it treasury? Is it, tokenization of collateral? Where do we go?
I don't think there's a golden goose. I don't think there's a single part of the business that we should all be rushing towards because we know that it's future-proofed for and then there's going to be tons of disruption, and it's going to be super exciting for all of us. I think it's probably a bit less of that. I think if you think about direction of travel, the industry is very focused on taking steps towards digital assets, and tokenized assets are one of the first use cases where TradFi assets still exist. They have a digital twin, and we move those digital twins to give us, really efficient mobilization and liquidity of those assets. What's coming, we know, soon behind is the use of stablecoin, the use of crypto, digital native crypto. We are working with banks at the moment on crypto solutions as well. So although as a TradFi industry, we're a bit more focused on tokenization initially, there are CCPs and custodian banks that are building out crypto solutions. Some of them are live already. You'll find them online without too much effort. And we know that some of those firms are actually now building crypto financing desks, crypto collateral desks. It's a crypto prime desk. So that whole ecosystem is
exciting, right?
Yeah, is closer than we think. And I would think as a youngster, looking at this holistically, to understand the way that the TradFi world is set up, and then being able to bridge into the new DeFi world across some of those key use cases incrementally over time would not be a bad move.
Amazing. I wanted to ask you about the Tonic Titans as we're coming to a close. It's such a great podcast. It's a great space for you to talk to other leaders in the industry, and you're on the other side. You're the one asking questions. Is there anything that stands out that you've learned from leaders that you've spoken to date that made you refine your definition of leadership?
Yeah, so tons. Too much to even put into a coherent answer to you. We've had our first few episodes out now. And I feel blessed, actually, that I'm able to speak to some of these real industry
great names, absolutely,
titans, leaders, about their journey, their personal journey. There's so much that I learn, but hopefully that our audience learns as well from how they've got there. Because that's the piece that we often miss out on, isn't it? We talk about hot topics at any particular point in time, and naturally focused on what their organization is selling,
of course,
or pitching. But I, on a personal basis, am more interested in how on earth did you get there? From into there's a COO at Northern Trust, Pete Cherovich, we spoke to recently, Nadine Shakar, head of digital assets at DTCC. They've gone on such a journey.
I love that.
I think the consistent theme that comes through from those conversations is some of the themes that we talked about earlier. So we talked about grit, we talked about resilience, we talked about regardless of what type of firm you work for, to be successful and to make it to the very, very top, you've got to have such a hunger and fight to you. And I would say the second theme that comes through is continual evolution.
Yeah.
So none of us can be the same person with the same core set of skills and capabilities and expect to go through the levels over time. It doesn't work like that. The industry, the world moves so quickly. Your clients' needs, regardless of what you do or what you're selling, move so quickly that there's a need for each of us to continually adjust, reset, and frankly improve ourselves. Go through this process of continual improvement, rebranding, almost. Like if I look at couple of those key names that have been on Titans so far, they've probably gone through 3 or 4 personal rebrands over the past 2 or 3 decades. And they're probably doing stuff today that they never would have imagined they'd be touching 10 years ago, let alone 20 years ago.
I love that. And it really is so important in today's world that we have leaders that understand the evolution of identity, because you're not the same person that you were, even a year ago, not to mention 5-10 years ago. And your organization grows as you grow, which is pivotal to the success of, all your teams and your clients. I wanted to ask you, as it's a little bit of a tradition on our podcast, about escalations. I know you don't deal with traditional escalations, but what this means really to us in our industry is looming deadlines, people losing their cool. When you see crisis looming, what is the Chris's kind of formula to contain the excitement around things that may go wrong? And how do you put your company back on track so that people know that it's good, we're safe and things are going to be resolved. So how do you deal with escalations that come your way?
Absolutely.
In
I
that
just
manner?
passed them to someone else, editor. I just passed them.
I love that we're going to go with that. That's it. It's not my problem. That's
not a real answer.
That's for Craig, right?
No comment.
No comment.
No comment. No, it's. I think it's incredibly important. Firstly, to stay calm.
Right.
Stay calm.
A lot of people can't do that.
Yeah, you can't get through any crisis or any pending problem without staying calm. And I'm going to use a rubbish sports analogy, I'm afraid. But we talked about tennis at the start, and tennis is a roller coaster. Every match is a roller coaster. You have ups and downs. You win a few points, you lose a few points, you lose a few games. You're ahead, and now you're behind. If you can't, and this isn't just tennis, this is frankly any sport, but especially individual sports, when it's all on you and you've got no one else to look at, you've got to reset and stay calm and create a plan, take some deep breaths, and bring the team around you. And then with the power of the team, you collaborate, you create the strategy, you create the plan, you execute it. That's the easiest part, right? Once you've actually got the plan in place, just making it happen. What's more difficult, I think, is for folk to take a step back and have the sufficient clarity of thought and calmness to make the right call. Because we work with clients that have got far more intense remits than me. They're responsible for thousands and thousands of people on a global basis. And we've worked closely with multiple major clients on regulatory-driven pieces in the middle of crises. The LDI crisis was I guess the most recent one that we've seen. But there's constant volatility in today's market as well. And I've got huge respect for those leaders at those firms that are able to make the right calls in moments of stress.
Chris, it's been a great pleasure having you on a podcast. Thank you so much for coming. And I'm wishing you, Craig, and the whole Tonic team the best of success. I mean, you guys are already making the headlines for the good reasons, and I love seeing you grow. And it's been such a great kind of circle back moment, because I remember when we first met a long time ago when we both were starting our journey. I'm wishing you all the success in the world, and I'm hoping to see you soon.
I've really loved the chat. Thank you for inviting me.